like you can invest in any market as long as you have boots on the ground and you have people there that you can build a team with.
We figured out how to house hack, and we hadn't really thought beyond that of owning investment property. But I just thought we got to figure out something better, because we thought we did everything right. But when that emergency hits, you can drain your accounts pretty quickly.
So I called it a light bulb moment, but it was actually like a sort of a panic in like, okay, our lives have changed significantly because of this health scare.
Kathy was helping more people get into these loans to buy their own investment properties. And then from there, we just decided to start helping other people do the same thing. Invest in these. One of the teams that we invested with north of Dallas.
I've been a product of a community, kind of this online organic networking that we've done through the podcast. That is the reason that Ryan and I have been able to grow our portfolio.
Even with a housing crash, there were areas where you could find safety. And it was affordable markets where there's job growth and population growth.
How we structured it is we were just, referring people to these property teams in different states, starting in Texas. And then as the company grew, we started to help more people and make more money at it.
Welcome back to the Wealth Juice podcast. Corey here tonight for you. We had two amazing guests on tonight, Rich and Kathy Fettke. Now, these two are big names in the space, okay, in the real estate world. Kathy has a partnership with Bigger Pockets. Rich, we had on our podcast a couple years ago. They have a new book out, Scaling Smart, how to design a self-managing business. The two of them are real estate heroes. But their journey starts when Rich was diagnosed with melanoma back in 2003 and their life got flipped upside down. I think this episode is really great for people that are learning or trying to learn how to scale their business. But Kathy loves talking about the economy. So like 30 to 40 minutes into this podcast, we really get into like, where's a great place to buy property, what she looks at for markets, and how she analyzes the markets based on affordability. We talk about climate change a little bit and like how she implements that into her buying strategy. But the two of them run the Real Wealth Network, and it's a network of 79,000 individuals that they help market and get them to build a real estate portfolio of their own in their own markets. So Kathy and Rich are in California, but they help people all over the country. Just two great people. They're all about abundance and helping others. And their story is super inspiring. So if you're looking to figure out where you should take your real estate business or how to grow or scale your business in general, it doesn't have to be real estate, this is a great episode. I want to bring them in. It was so much fun. So let's do it.
Quick public service announcement for all of our listeners. First off, we want to thank you all for tuning into the show, not only this week, but we've seen you coming back episode after episode. And one thing we'd really like your assistance on, if possible, you know that our content's free and it takes a lot to pump this out every week. We're really looking to enhance our overall reviews on the show. That can be on Spotify, but mainly we are looking for Apple Podcasts. If you could please leave us a 5-star review, that will go so long and so far for us. Really, when people are looking to get on shows, they look to see how many 5-star reviews that show has and the number of reviews. So if you haven't left one, please just click on our show. You can scroll down to reviews and then leave the 5-star. Even if you can write a little blurb about us, like what maybe has helped motivate you or anything that is relatable to your life, that would go such a long way for us. And then in turn, it allows us to get high quality guests for future episodes. So if there's been a motivating episode that you can really think back to and that has really helped you in your life, please leave a review, because we'll be able to get someone like that on the show in the future to help someone else out. So that would be very much appreciated. And we look forward to continuing more episodes for you.
Kathy and Rich, welcome to the Wealth Juice podcast. We're excited to have you on the show. I appreciate both of your time tonight. It's been a while. This is my first time meeting Kathy, but Rich was on the show. I think it's 2.5 years ago. We had a great conversation. I'm glad you're back, but it's awesome to have the two of you, the power couple, together here. So thanks for coming on.
Yeah, thanks for having us. Yeah.
Great to be here.
Cool. So I think this story for you two is really inspiring, but I want to take it back to maybe your entryway into the real estate game, because I know that's what the two of you do really well. You have multiple books, a community, podcast. So there's so much to talk about, but real estate kind of started it all. So I'll let you decide how far back you want to go, but I'd love to hear, when you get started in real estate, when the light bulb went off and like how you knew that this was going to be something that you started to create your life around.
I think we always wanted to own a home and invest in real estate. We knew people who were successful at it. Not personally, but that's usually where people put their money eventually, is in real estate. But we thought it would be later in life. We thought you had to first sort of have the money and be wealthy before you could invest. So our first opportunity was really solving a problem. And that was my dad's problem, where he had invested in an apartment and that didn't go so well. And yet he had taken deductions over the years. He was planning on retiring. And suddenly the owners of that apartment, or the sponsors, sold it. And he would have had to pay all the back taxes if he didn't find an exchange property, a 1031 exchange. And Rich and I were just getting married and we're renting. So we're like, well, Dad, what's the problem here? You just need to find a property, and we can do that. We can find a property and take care of it. And you don't have to be a landlord. And, we'll just take that burden off of you. And that was the first deal. We ended up hacking that house that we helped my dad exchange.
Got it.
I'll also add on to that Kathy's got
go ahead.
4 other siblings, and they had the same opportunity, but Kathy went for it and took action, got out there and made it happen. So there's also that side of things. It's when you take action, you're rewarded. When you don't take action, you usually don't get many rewards.
Got it. So Kathy, your father, was it like a limited partner in a syndication basically at that point? And then you were able to do I don't know if it was considered a 1031. I didn't realize that you could even do a 1031 from a syndication to a single family. So is that what happened? You took the cash into the single family, and then the two of you managed it, and that was your first like, oh wow, this is how real estate actually works.
Yeah, he had to spend at the time around $540,000, which doesn't sound like a lot now, but this was over 25 years ago. So it was a large amount, and he just wanted to retire. He didn't want to be a landlord. He couldn't afford to pay the back taxes, because a lot of people don't realize there's recapture. If you sell a property, you have to pay a lot of the deductions. You have to pay back some of the deductions. And so we got what ended up being like a 6-bedroom house that we turned into a 4-plex and rented rooms out to friends. We actually kind of lived in a commune style with friends living there with their kids, and we were kind of raising our kids together. It was a really great experience, but we got to learn how to be landlords. The property increased in value. We helped to improve it, but it also just increased in value over time. And so my dad was able to eventually refi and get all the money back out of it that he had ever put in it. And he was able to retire. And then eventually we inherited it later.
Yeah. I'm not sure what his structure was. He talked about his partner sold it, and then sent him a letter saying that they had sold it. So I'm not sure if he was an LP or if it was a JV or what it was, but that was before we knew what any of that was. So
yeah.
I can't remember.
Yeah. So you kind of had like an accidental, a lot of people start in this accidental story in a way. Like you were helping, and then it turns out that you needed to help more than you thought. And then all of a sudden you're managing this property. So I'm very curious about the next couple moves from there. You must have realized, okay, this model that we're doing works. I converted a 6-bedroom into a 4-unit. The math probably made sense for you. So I'm curious about your next couple moves. And how that parlayed into scaling.
Yeah, well, the story is that back in 2002, I think it was, Rich was diagnosed with melanoma. He's a redhead, as you can see, has lots of freckles, but he noticed this one specific freckle that looked different than the others, had it checked, turned out to be skin cancer. And this is the deadliest skin cancer. Again, this was over 20 years ago. And the doctor thought it had spread. After more tests, he told Rich that he probably had 6 months to live. Now we're living in this big house, managing it, had all these, tenants there basically. And we had two little kids ourselves. And it was just a complete panic moment where we had done everything we thought correctly. We were saving for emergencies. We had little buckets for your money, emergencies, for investment, for fun. We pretty much drained those accounts during that time while we were trying to figure this out. So I used my radio show at the time. I was a stay-at-home mom for the most part, but I had a radio show on KNEW in San Francisco on the weekends. And I just quickly pivoted it to, wow, how do we make passive income? We figured out how to house hack, and we hadn't really thought beyond that of owning investment property. But I just thought we got to figure out something better because we thought we did everything right. But when that emergency hits, you can drain your accounts pretty quickly. So I just started interviewing people and just like, how do you create passive income and what is it and how do you do it and how do the wealthy think? And that kind of changed. That's where we learned a lot of the things that we now teach.
So it came out of this, I called it a light bulb moment, but it was actually like a sort of a panic in like, okay, our lives have changed significantly because of this health scare. We have to make this work. And, you use the resources around you that you had to interview the right people, to make the right moves. So that's very interesting. And I remember hearing that is kind of what happened and Rich overcame it. I'm curious about, how did you decide on a strategy? Like, how did you decide what to do from there and how do you put those thoughts into true action?
So Kathy became a mortgage broker. So she started to help people with loans and, make an income that way. She kind of monetized her radio show, and a lot of people come into her for mortgages. And then she was helping people with those mortgages buy investment properties. And so she really got hooked on this whole thing about, oh, wait a minute, you can actually leverage, this was pre-2008, so you could do no money down loans and no income, no assets, and just sign on the dotted line and get a house. So she came home all excited saying, I think this could be the strategy. And so we took some of that. We did a cash out refi on that property that we had turned into the fourplex. And we used some of that money for some down payments and to buy 6 rental properties north of Dallas, Texas. So those properties really, that turned us into true real estate investors rather than just landlords. And Kathy was helping more people get into these loans to buy their own investment properties. And then from there, we just decided to start helping other people do the same thing, invest in these. One of the teams that we invested with north of Dallas, they said, if you bring investors to us, we'll pay you a referral fee. And so what we started to do, we started to help people with that and send people to them. And so they were our first property team. And at that time, that's when we decided to create a company to help people do that. And that's what we called Real Wealth back then.
Yeah, I'd love to get into real wealth, and that's the next topic of conversation. But I just want to get a little bit granular real quick because You're in California, and you're in a high cost of living area. I'm very curious. It may not pertain to 2024 because you bought these properties, 15 years ago. But how did you choose the market north of Dallas? Is it somebody that you met through the networking that you started to do? Like, what sparked that? Because the reason why I asked the question is that people that are listening today, we tell people all the time, you can invest in any market as long as you have boots on the ground and you have people there that you can build a team with. So I'm very curious on how you decided there. Was it something you fell into, or how did that work?
Yeah, there was some guy that she knew named Robert Kiyosaki.
Okay, I've heard of him. Yeah.
Yeah, I got to interview him on the Real Wealth show back then. And also the reason I was a mortgage broker is we needed money today. We didn't want to wait. Real estate, oftentimes, what do they say? You got to wait for the profits to come. But we needed money then, so I got sponsors for the show, and one of the sponsors was a mortgage broker. And so when we were doing shows for him, we were doing such interviewing his clients and all the things that they were doing. That's when the show really took off, when other people wanted mortgages, and my sponsor was like, you should take these mortgages. I can't keep up. So that was part of it, is interviewing his clients and seeing what they were doing. But then having Robert Kiyosaki on, that's when he explained how these crazy loans that we were able to do. I mean, I just came into the mortgage world thinking, is this really how it works? I can just give a loan to anybody. I don't need any background check, nothing. All I have to do is fill out an application and pull your credit. In some cases, not even that. So it just really didn't make sense to me. And then when Kiyosaki came in, he said, yeah, because it doesn't make sense. These are going to blow up, and people are going to have to start making their payments in 2007. So he said it's really important to get out of the bubble markets. And those were the markets where prices had gone up 40% every year. It was California, Arizona, Florida, Nevada. He said, sell now at the peak, because pretty soon those payments are going to adjust and it's going to be a bloodbath. But he said Texas isn't experiencing that. The affordability was still there. And that was the big shift, is like, oh, affordability. That wasn't really anything I knew, because I was born and raised in California. Nothing was affordable ever. And the loans I was doing for people were generally negative cash flow. So it's like, I didn't understand why people were even investing. They were kind of used to feeding their properties. It was not cash flowing. It was the opposite. They were cash flowing, just the negative variety. So that's when, Kiyosaki really explained on the show that there were, even with a housing crash, there were areas where you could find safety. And it was affordable markets where there's job growth and population growth. So that was really enough for us. I was able to write loans. I could do our own loans as a mortgage broker. And in some cases, we didn't even have to put any money down. So we ended up with, 12 properties eventually in the Dallas area, because once we did one and put very little money down and it cash flowed, it was like, oh, this is how you do it. That's much better than negative cash flow.
Yep.
And then when we started talking about it, when I talked about it on the show, that's when we had lots of people saying, oh, please tell us who you work with. Who's your team? Can we use your property manager? Can we use your agent? And that's when the Real Wealth Network was born, helping other Californians, other people in high price markets be able to build their portfolio in markets that make more sense.
Let's talk about that then, the Real Wealth Network, because I've been a product of a community, kind of this online organic networking that we've done through the podcast. That is the reason that Ryan and I have been able to grow our portfolio to about 70 units, some of which we own just the two of us, some of which we own with partners, but it would not have been possible without community and network. And I know you two are like, that's what you do. Like, that's what you stand for. So just talk to me a little bit about Real Wealth and like how that came to be, and just the value that you put on community and having, a group that kind of goes that thing together and that you can turn to when you have questions.
Well, it's really daunting, isn't it? To invest is scary enough, but then to invest somewhere else where you don't live is terrifying. And we had to sort of figure it out. And the first few agents that we met with were terrible, and they took us to neighborhoods that never would have worked. They just saw a California license plate they were like, oh, we could take advantage of these people. So we had to go through the process of figuring out how to create teams in these foreign, quote unquote, foreign markets, places we didn't really know. We had to learn how to understand the market and choose it. And again, it does come back to areas that you're seeing wage growth, you're seeing job growth, population growth, because generally that means that real estate is needed, that housing is needed. It's hard, even in Texas, to provide enough supply. Even if it's easier to get houses up and running, it still takes a long time when there's strong job growth. So that usually means that prices will go up over time, or at least you'll have plenty of tenants, and that rents would go up over time.
Got it. Okay. So I assume Real Wealth, then I'm looking over here, it's got 75,000 plus members. That might even be old data. It might be much bigger than that today, but that's the information that I have. So what is the structure of Real Wealth? Like, at first I assumed that you built this network and maybe you weren't sure what to call it, and then it grows, and then you realize, like, oh, we have something here. That's kind of what I was thinking. But maybe, Rich, if you could start, like, correct me if I'm wrong, is that kind of how Real Wealth came to be? And then how did you market it and kind of brand it as a company?
Yeah, it was somewhat organic. I think what really happened is Kathy was invited to speak at a lot of the real estate investment associations around the San Francisco Bay Area where we were living. And she would come back from these and say, I'm kind of disgusted with some of these because they have these old school speakers coming in and they're selling products and courses at the back of the room. And they're doing this old dated sales technique, chopping the price today only and everything. And people run to the back of the room. And she said, and I look at the products and the courses they're selling and they're so outdated. It doesn't work today. So she came home and we're actually in a little cafe up in Sacramento. We were up there together and we were talking about it. And she was saying, we should just form something where we can really help people and really be, quality and bring, real people together, offer them quality real estate and not sell these expensive courses. And I was doodling on a napkin at the time as she's saying that. And I just was writing words down. And I said, how about Real Wealth Network? And it was just like, we want to keep it real. We want real people. We want to talk about wealth. And we also wanted to talk about real wealth coming from coaching, which I was doing before that. I was a coach and an author and speaker. And I was working with clients a lot on, living their lives to the fullest, becoming the best versions of themselves. And so we wanted it to be not just about making tons of money. We wanted to create something that was about living life on your own terms. Now, again, this is back in 2003. It's a long time ago when the live life on your own terms and financial freedom wasn't really talked about that much then. And so we kind of put our stake in the ground and we said, we are the anti-guru. We are not going to sell expensive courses. We're going to offer free education. We're going to have our events be free. And so we did monthly events for free. And that's how we built this community. Now it's a little bit bigger than that. We're up to, I think, 79,000 members now from what you got there. Yes, it keeps growing all the time, which we're grateful for. And so that was kind of the birth of it. And then how we structured it is we were just, referring people to these property teams in different states, starting in Texas. And then as the company grew, we started to help more people and make more money at it. Then I was looking at that saying, are we doing this the right way, with the Department of Real Estate and all the legalities of it? And then we hired a DRE attorney to really investigate our model and to see what we were doing and were we doing it right. And we weren't. So then we had to form a California brokerage and a corporation to be able to refer people from broker to broker. So I got my broker's license, and then we can refer people to other brokers in other states who have properties available. And so that's kind of the structure of it. And that's how we monetized it. So we created community by giving everything away for free. And then we monetized it through helping investors get into rental properties without costing them any more and without charging them a lot for education, but paid by the seller of the property.
Makes total sense. So your motto was like, let's teach people everything that we learned about the business and then give them the team so that they can go do it themselves, basically. I mean, in a nutshell, I'm sure there's a lot more to it. That's kind of how it works.
That's it. We wanted to make it simple for people because, it was mostly busy professionals who didn't have the time to go out and walk through properties or, even to invest out of state. So we made the process easy for them and the word spread.
We also discovered that there was a bit of power in this model because if you're a California investor from New York or a high price market and you're investing in, say, Alabama, and something doesn't go well, if your property manager isn't treating you well, who are you going to talk to? Who are you going to call, basically? But when it's Real Wealth making that referral and we have an unhappy member, there's a lot, we're the elephant in the room, basically, like, you better take care of our people because we're not going to refer anyone to you anymore. In fact, we're going to find someone better and take all these clients away. So it really is the power of the group, making sure that we're being taken care of, that we're not mistreated as out-of-state investors. So many Californians and don't understand other markets and the price points and the rents and so forth. So that it's just an added layer of protection when investing outside of where you live.
Yeah, I
Mhm.
think there's a maybe this like misnomer where people feel like they have to go at it alone, and I've been in that crowd for a little while. It's like this lone wolf mentality, like it's me against the world, like I got to figure this out and no one's going to come save you. And like while some of that does ring true, I don't think you should you should take an election and think that that's going to solve all your problems, but I do think that there are people out there that are doing exactly what you want to do and are a couple steps ahead of you. And to have somebody who can refer you to someone else that they've used or just show you the path, to me, it's especially with the internet now, and you were doing this in a time where the internet was not as big as it is now, and
Yeah.
now I'm sure you're able to expand it even in further, and that's kind of what I want to get into with your new book, Scaling Smart: How to Design a Self-Managing Business. Does scaling smart refer to any business that somebody wants to start? Is it specific to real estate? Like, if you give us the background on how that book came to be. And I know it's not your only book, but it's your newest one, so I wanted to highlight it.
Well, Bigger Pockets actually approached us and asked us if we would write a book. And initially, they wanted it to be on investing with your spouse, because that will probably be our next book. There's a whole lot involved in that.
Right.
But they kind of tested their market, and they have like 3 million members or something. And it came back that people really preferred or wanted to learn how to scale. And that's where they were stuck. So that's what they asked us to write. And they asked us to, it's a real estate group, so have a real estate focus, but really also for any business. And it is really for any kind of business that's already started. It's not necessarily a book for a startup, but when your business is started and you're overwhelmed and you're not really sure how to grow and bring on more people while still bringing in more income, and that's the catch, right? Like, how do I grow without growing myself broke, without taking on so many expenses, without being able to increase income even faster? So that's what they asked us to write, and that's what we've been able to create, really thanks to Rich and his background in business and his degree in business and his overall, I think, ability to structure things because of his background in bodybuilding, where it's all about structure.
Absolutely.
Yeah, he's obsessed with business, so it really came down to 2008, where that was me. The company had grown so fast, bigger than me. I didn't know how to manage people. There's that time in business where you're really good at the thing you do, and that's why your business is growing. And all of a sudden, you're kind of forced to do something else, and that something else is managing people. And most people have no clue how to do that. They were just maybe good at, I don't know, maybe they were a great accountant. Maybe they were, in our case, great at real estate. But oh my gosh, now all of a sudden I've got 15 people I've got to manage. No one taught me how to do that. So in 2008, I begged Rich to coach me, because he had been coaching large corporations and big companies. I thought, could you coach me and could you help me? And that's when we decided, all right, let's do this. Let's see if we can run this business together. And that's when he brought structure in.
Yeah, those first 5 years, I was the chief support guy was my official title. So I was editing podcasts, putting the podcast up on iTunes when it first happened, creating a lot of the systems and structures, even building the first couple websites. So I was very much the behind the scenes chief support guy. And then, it was 2008 when Kathy said, let's take this business to the next level. And then we really created some structures. And honestly, what we put in place was we put in a clear purpose, a clear mission, clear vision. We got clear on our core values. We started to create an org chart for our company about where we wanted it to be in the future. And then we started to hire to that org chart. And we actually, over time, built on the cover of that book is build a self-managing business where we have an inspired team of leaders who are running the company for us. So we can go and focus on passion projects like writing books or speaking at conferences or playing with our grandchildren.
Yeah, it's brilliant. And I want to get into maybe some action items or takeaways for some of the people listening here. So like, for example, you mentioned there's a vital distinction between scaling and growth within your business or within your book, but that parlays into like the business. Selfishly, Ryan and I are growing a business right now. So we have our real estate business that we're growing, but we're really focused on our coaching program and trying to grow that. So as we bring in more people, we want to make sure that we're giving all the value that we can to the community and pump all of our time and energy and effort to making that community as best we can so that it sells itself in terms of referrals and just people that are like getting to their ultimate goal. That is how we win, when they get to their ultimate goal. Now there's, we have to spend money on advertising, and we have to do sales calls, and we have to do appointment setting. There's so much to do. It's all fun right now in the beginning because we're learning and we're a few months into it. But I want to go back to like scaling versus growth. And is there a way to look at them differently? Like when you get to a certain number, that's when you can hire people. I know it's kind of an open-ended question, but maybe you can provide some clarity of like how when it's the right time for Corey and Ryan to focus on X and you to hire somebody to do Y. Is that a fair question to ask?
Yeah, I mean, it's a very fair question to ask. And I think it's an important question. Is a lot of business owners don't ask that question. And it's, they start dumping money and all their profits back into their business for the sake of growth. And they often get caught in the trap of growth, where it's like so many things you're seeing online. It's like 10x your business, and they're trying to grow their business so fast, and they're pouring so many resources into it of their time. They're throwing their lives out of whack. They're throwing their bank accounts out of whack. And so that is when you're only focused on growth. When you're focused on scaling, you're looking at what's the most effective use of this money. How can I get a return on investment? Just like in real estate, how can I get a return on investment for this money I'm about to invest? How are we going to leverage this? How are we going to make it better? And that can be by hiring that key player, your next key player on your team. But it also can be looking at how you can basically, if you look at scaling, that's where your revenue is increasing at a faster rate than your expenses. Whereas growth, a lot of times your revenue is increasing, but your expenses are keeping up with that or exceeding it. And that's where Kathy was saying, that's where you can grow yourself broke. And we've seen it happen so many times with other business owners, with colleagues, with friends. And it's a really crappy trap to get caught into. So it's stepping back and saying, okay, what's our scaling plan? If we invest this money, how is this going to bring a return on investment over the next year, 2 years, or 3 years before you make that investment?
So I guess the vision really has to come first, right? Because if you have I'm just use round numbers. If you have a $5 million a year business, you could have a $5 million a year business with 33 employees that your overhead is extremely high, and there's not enough profit left for the owners to take any, the math doesn't work. You might be losing money, or you can have that same business with 11 employees where it's thriving and you're able to grow. I'm very curious, like if you were to equate this to a real estate company that was going to wholesale and flip, if you're running the business, and I realize this is kind of like putting the both of you on the spot, but if you're trying to do that and you're running the business, do you think the owner should focus on, hey, I need to figure out the best way to lead generate, and I can offload like administrative tasks first? I guess the question I'm asking is like, where do you feel like the first hire comes in? I feel some people have said, hey, you need to hire somebody right off the bat to manage the company. But to me, it seems like you need to learn all of the things. You need to learn all of that before you like offload and go try to hire a CEO that doesn't even know the business. And that might be extreme. But what do you feel like the first couple hires can be? And maybe it depends on the business type, but maybe you have some insight, either one of you, for how to go about your first couple hires.
Well, the first thing to do is write down everything you do, everything that you're spending your time on. Just have a notebook by your desk, and for a week, write it down. I'm doing this task. I'm doing this task. You could do that on sticky notes. And then once you've got all the jobs that are being done, you can put them on a piece of paper to start forming your org chart, your organizational chart. And in the beginning, it's probably going to be mostly you, or you and your partner are going to be all over it. Like Rich and I, we were doing everything. So he was editing my podcast, and, I was doing the books, and I'd get tired of doing that and he'd do the books. So we just had all of these jobs we were doing. So you start there just to know what the jobs are. And there, when you're looking at the org chart, you've got different categories. Usually there's finance, there's legal, there's product quality, marketing, sales. These are the different, every org chart is different, but they generally have those things. And you can start to put all these things you do under those different categories. And then once you've done that, you can take a look at the things, start rating like Rich editing. What would it cost to have somebody else do that editing, and what is his time worth? So once you can start to dissect all these things that you're doing and rate them, how much it would cost for you to do it versus somebody else, and then your level of enjoyment. Do you like doing this job? Are you good at it? Or do you hate this job and you're terrible at it? So usually I hate this job and I'm terrible at it, that's the one you want to hire out first, right? And for us, that was bookkeeping. Oftentimes it is. That's usually not most people's forte, but there's people out there who love to do it.
Yeah, one comment you made, Corey, was around, should you just hire someone to kind of run things and everything? I would absolutely no on that one, because for you to run things in the beginning, then you really understand your company. It's your vision. You're starting with your vision, and you're also protecting the company culture. So the only way to have a self-managing business is to have self-managing teams running the business. And so to have that, you need a really good culture. And I think that you have to protect that culture fiercely as the owner of the business in the beginning.
I think when people think about org charts, and I know this happens to me, I think like, okay, if you have an org chart, your company's huge, it's massive, you have all these employees. And when in reality, I feel like you should start to think about that very, very early on, because if you're running a coaching business or you're buying real estate, like you have a business, you have something that has the ability to grow. And that's the purpose of business, is so that you can grow and you can help people. But I think, would you agree with like this? Earlier you start with, if it's just the two of you, it's me and my partner, Ryan, you still have an organizational chart. You just might be sitting in all the seats that you don't want to sit into. So I felt like, now I say this, I don't even have an organizational chart, so I'm learning here on the call. But like, as you're saying it, I'm thinking, okay, regardless of how much revenue our business is doing, in order to replace us in certain tasks, we have to know what seats we sit in. And would you agree with that?
That's exactly it. Yeah. Looking at what you're doing. And as you start to look at all the things you're doing and determining what is my highest value, what's that thing I'm so good at and I love doing that nobody else could probably do it as good as me. Eventually, you want to only be doing that. That is your highest value. And that's kind of irreplaceable. But the other stuff, like, Rich didn't hate editing my podcast. He just was better at other things. Like, he should be putting his efforts into other things, like managing the whole company, like growing it, and going to different workshops to understand how to continue to grow our business. So some of the things on the list you might actually like doing, and if we like doing them, that's oftentimes what we will do because it's comfortable, but it's not really going to move the company forward. So creating that little mini org chart is so important, to be able to look at it and say, okay, this right here, this is the puzzle piece that's taking my time. I don't like it. I'm not that good at it. And somebody else could do it better than me. And maybe I don't have to pay them as much as I would want to be paid. So that's number one, because that will free you up to spend more time on your superpower.
I'm curious about how you two have built this life where business hasn't consumed you both, right? And maybe that seems so intentional from the two of you. Like I growth and revenue and driving business, and like I can see it having this effect on people where it's like you kind of lose yourself in the process. It's like, what are we really doing all this for? And I imagine that, Rich, your health scare had something to do with that. I don't know if it was a shift or if it's just it was more amplified, but how are you able to prioritize like the life part, right? And that's so important to me. And I'm only 32. I'm going to be 33 in a week, but I still think about it every day. I'm like, am I doing this thing right? I'm spending so much time, energy, and effort, 15, 16-hour days, whatever, trying to build this business. And I'm thinking, I gotta live now so that if something bad happens to me, I don't regret that I didn't live while I was enjoying the journey. So I know, Rich, you've coached a lot of people on some of these topics and how to live your best life, as you've said. Like, do you have advice for somebody who's trying to do both? They're in their, it doesn't matter how old they are. They could be 20s, 30s, 40s, 50s, 60s, whatever, but that is trying to say, what I know that I have to prioritize my business if I want it to grow, but I also want to enjoy the process. So what would you say if Corey was asking you that question? Because I am.
Well, yeah, it really comes back to that. It's like what Kathy just said, something about your superpower. So it's getting very clear on what is your superpower. Like the book, The One Thing, right? It's like getting very clear on what is that thing that you are exceptional at, that you love doing, that is the biggest return on the time investment for your business. Where if you put more time on that, you're going to bring in more money, more revenue for your business. I think it's getting very clear on that. And then it comes back to, yeah, that was a shock, being told that I had 6 months to live and waiting for test after test. And it took almost 3 months before I got a PET scan. And then they came back and said, you're 100% cancer free. It was a misdiagnosis. But that 3 months, it was hell. It was like tears, fear, all this stuff. You know, it was what inspired Kathy to be like, what am I going to do if Rich dies? So I hope no one has to go through that to get shaken up like that. But, you know, take it from me. It's like, you don't want to wait until something like that, especially if it's a real diagnosis, to be shaken up. So it's about the way I always worked it with my clients was constantly assessing, where are you in life? How satisfied are you with each area of your life, going from your health to your relationship, to your family, to your spirituality, constantly reassessing that at least once a month, and to really give a rating of like, how am I doing in each of these areas? And if you're putting a focus and all your attention on career or your business, and you're saying, well, it's like an 8 right now, and you're looking at your relationship and that's like a 5, you need to make a shift. And you have to time block, and you have to say, okay, what am I going to do to start honoring this other area of my life?
Yeah, that's great advice. I think it's easier said than done, but I when you said the cadence to it and you said once a month, I was a little bit surprised. Like, it seems like a lot, but it sounds like in order to get any of that ironed out, you can't wait. It can't be once every 6 months. It can't be once a year. Those things will fall by the wayside. So do you have any tools or processes, or, maybe you just explained it a little bit, but like, how would somebody implement that? Is that really just taking a day on their calendar once a month, or a 4-hour period once a month to sit down and evaluate? How does that work for you? And how did it work for some of the people you were working with?
Hire a coach. I've had a coach for the last 26 years. And now I used to talk to a coach every week. Now it's once a month. I do a 1-hour coaching call with my coach, because he asks me the questions I'm not asking myself, or he even asks me questions that I've asked him to ask me. So I'd say, once a month, he's going to ask, I have a set of 8 questions that he asks me. One of them is being, how much are you being a worker versus a leader? Because it's easy for me to get sucked into working on tasks and being at my keyboard and on my computer and not having the effective conversations with our team. So it's like, it's a constant check-in. And then often it's an assessment of what's working in your life, what's not working in your life, what needs attention. And so having a coach to hold up the mirror for you and ask you those questions, it's 100% vital.
Beautiful. That's awesome. So as we wind down the show, I have a few more questions, but before we get to that, I wanted to ask Kathy, a lot of what you do, Kathy, now in collaboration with Bigger Pockets, is kind of talking about the market and like where you see things going. And that's pertinent to any real estate investor, anybody in business. Nobody has a crystal ball, right? But I'm very curious, do you recommend people keep it simple and try to buy property in the affordable areas? And how do you see, the end of 2024, early 2025 playing out? And I realize it's kind of a loaded question, because if you knew the answer, then I don't know, you might not be talking to me, but just, I'm curious what you're seeing, with rates dropping and like maybe some areas of interest or places that you feel like of opportunity, if you will?
Yeah, actually, rates, the short-term rate was cut, but mortgage rates went up again. So that's been really confusing to people not understanding the difference between those two. So what the Fed is doing right now is they are finally cutting rates, and they generally do that to stimulate the economy. For the past couple of years, they were raising rates to make money more expensive to slow down the economy. And of course, it slowed down mainly in commercial real estate because people were, those are adjustable rates generally in commercial. And so apartment investors, storage, new home builders, they all got hit really hard when rates went up. So the bottom line is the Fed is now shifting, they're pivoting what is now turning into more of a stimulus. And that generally is good for the economy. The stock market gets excited about that, about rate cuts, because that means cheaper money, right? People are going to borrow it and they're going to buy stuff. And we are basically a consumer economy. And when things become more affordable, people spend money and they borrow money. So that's why we've kind of seen the stock market rally a bit. We've seen the job market remain really strong. But when it comes to housing, at Real Wealth, we are very much focused on 1 to 4 units. We're not in the commercial space very much, although I syndicate. But what we syndicate is built to rent communities. So if we just focus on that, let's just focus on buy and hold investors for a moment. There is said, it depends on who you talk to, but a shortage of about 7 million homes. We have the largest generation today, the millennials, ages like 32 to 35, who are just starting families. They're right about your age. They're going to have pets and kids, and they want yards, and they want space. So the suburbs are really booming. You might have a market like Tampa. Of course, Tampa's been in the news a lot lately, but
I have a property in Tampa, so I've been very, very keen on what's
yeah,
going on.
I hope it's okay.
It survived
Yeah.
Helene and Milton. So thanks for bringing it up. Go ahead. Talk to me about Tampa. I love it.
We have properties there too. And as far as we know, they're fine. But there was a lot of talk that rents were going down and prices were coming down in Tampa. And that may be true, but not so true on the suburbs, because you've got these people, families, the largest generation now at first-time home buying age, first-time household formation age. And they're generally not going to be living downtown. They were, it was very cool for millennials to live downtown. Our daughter is one of them. She's been living, downtown Denver, but probably moving to the suburbs soon. So you've got that dramatic shift along with the back to work orders. A lot of businesses are requiring people to come back to the office, but people don't really want to live back in the city. So suburbs, they need to be driving distance from work, but still want to have that space. So things always go in cycles. This is nothing new. The suburbs exist because of this, but it's becoming hip again, mainly because of this demographic that is forming households, and there's not enough of it. So we are very bullish on the single family home market. You mentioned investing in affordable markets. I am not a big fan of affordable markets in the sense of places that are always just kind of the same price. You could go to Jackson, Mississippi, and the house that maybe I would have considered buying 20 years ago is the same price today. So that's really not how you're going to grow wealth. That's not going to work, because as soon as you got to fix something, and remember, houses do get old, things have to be replaced, you've wiped out your entire year of cash flow. So I like affordable markets that are also growing. And again, that would be the suburbs of the hot cities. You've got Austin that got too expensive. Well, people are moving out. That's why we've got a build to rent community just in San Antonio in the Northwest. That area is growing and still somewhat affordable for the average person who lives there. So you got to be careful with just going to an affordable market. You may not be able to grow your wealth there.
No, I get it. I think it's great. I think the first time investors, a lot of people that listen to our podcast they're either just starting or they're maybe at that 5 to 10 unit, maybe in that 20 unit range. And I think what people are realizing, and Ryan and I went through this phase of like, we got to find cash flowing markets. And then when we realized we went to the cash flowing markets, that you couldn't even collect rent. So you're not going to cash flow.
We've done that too.
Yeah. So I think that's very, that was great information there about the specifics of the suburbs. I've actually never heard anybody put it that way. Would you say, still Arizona, Texas, Florida, like where people have been moving recently, like the migration patterns, is that where you'd recommend people looking? I mean, I know you can win in any market. I'm just curious if you had maybe any specifics on like trends that way, if you follow the migration and jobs moving to those areas still. I know it was really, really hot. It's cooling off, but it's still up so much since 2019. So any take on that?
Yeah, the Southeast has been the highest migration area. All Florida, of course, Georgia, the Carolinas. These last storms may have changed some minds. I actually think if you want to really get ahead of the curve, you probably want to be in areas that, I can't even believe I'm saying it, but this month has shown us that insurance is going up because of all the storms. So some of the markets that traditionally have just been cash flow are maybe going to be a safe haven for people. And by that, I mean Indianapolis. You don't hear a lot about storms there. We've got a great team in Indianapolis that's been a great market for a long time, but we're starting to see that area really grow. Even parts of Ohio, Michigan, they're considered to be the most resistant to climate change. And as we see insurance rates going up and more storms, you might see more movement to those areas. So to get ahead of that curve, you're hearing it from me maybe first, but that's there's plenty of water, and that's another issue. You've got Arizona. Yes, it's a hot market, but it is literally a hot market, and they're running out of water. So that, you can imagine the issue that would be. Just a couple of years ago, Rich and I couldn't water our lawns. I mean, sounds like a first world problem, but everybody's lawns were dying because we didn't have water. So that's really going to be an issue. Looking for areas like, again, Idaho, I've got plenty of water. We have a development in Salt Lake City. I think that's going to continue to grow.
Yeah. I think it's interesting that you have that perspective. I've thought about that too. I think it's a really hot button because of these two storms. People talking about climate change. I do think that there have been hurricanes hitting Florida and the Gulf for years. But I will say, if I had a prediction of what I think could happen, is that it'll actually become way, way less affordable to live in those areas, because the standard is going to be building these properties on the beach that are going to be like hurricane proof, so to speak, built up. And I think all these people, my point is, I think people are still going to want to live by the beach. I don't think it's going to change. I just think that I've been in a lot of areas in Tampa and St. Petersburg, and there's shacks on the ground, and those things got destroyed, and you can't rebuild them because now the code is like, well, we have to build so that they can withstand water because the hurricanes are likely not going anywhere. So I do think that there's still going to be a demand, but it's going to be like on the higher end. And I think that could drive up a lot of home prices and maybe price the affordability out of people living on the coast. Kind of what happened in Miami. I mean,
Miami's overpriced. But we bought a duplex, brand new duplex in Florida in Palm Coast, and it's insurance is actually pretty low, because insurance companies do understand that new builds are built to hurricane standards. We have a friend, actually a former employee, who bought in Fort Myer during that. Was it Ian?
Ian, I believe, yeah.
And it was right over his house, and a few windows broke. That's it. So these new homes they're easier to insure. They really do withstand the high winds. And also inland, people do still want to at least live near the beach. So if you move inland a little bit, that's a good call too. Because yes, you're right. People will still be moving to Florida. Hurricanes have been a thing for a long time, and it hasn't had people leave. Because it's a beautiful place. And of course, like you said, it's been affordable, and maybe that's changing. Yeah. So we're still bullish on it. We've got a great team there that's able to get interest rates. The nice thing about buying new homes, besides what I just said, they're really resistant to hurricanes, and they're cheap to insure. But the builders will, instead of reducing price, because they don't want to lower their comps, right? If they're selling a bunch of homes, they don't want to compete against themselves and lower the comp. So instead of lowering the price, they will pay down your interest rate. I think just this week, one of the builders we work with is lowering the rate to under 4%. I think it was like 3.75%. Wow. So you can get a new fourplex or duplex and have it cash flow at 3.75%.
Wow. Okay. So this is, I can talk about this for hours. I won't hold you that long, but I appreciate the context, because in every scenario, there's opportunity that comes up. And I think that, what they say, when others are fearful, be greedy. And when others are, greedy, be fearful. That the kind of thing is like, people are kind of thinking that this is going to drive all these people away out of those markets. And I'm thinking, I don't think so much, but there is that insurance issue that has been going on for several years. And I think it becomes harder to insure homes that are at risk. So it makes total sense. I value both of your time. I don't want to hold you too long. I just have one last question and if you both want to answer, that's fine. If either one wants to answer, that's perfect too. You've been building businesses for a long time, very successfully. Multiple books. We talked about your last one, Scaling Smart, How to Design a Self-Managing Business. I'm curious about your why. And, you're probably, I'm not trying to put words in your mouth, but I assume that you don't have to work anymore. So maybe that's not the case. But the point is like, you've made it, so to speak. You're both very successful. What's the why? What gets you out of bed every morning to do what you do? You clearly love it. I think that's important for people to frame as they start to build the success in their own lives. Either one of you.
I'll jump first, Kath.
Yeah.
I think you should share that too, your why, because our whys are slightly different. But I got clear on my purpose of why, not just purpose as far as giving back to the world, but my drive and my why was, it came down. I was on a hike. I was way out in the open space and I was hiking. And I'm like, what is my why? Because, this is the question that we get asked a lot in personal development and in all these, books and all that stuff. And it came down to this simple thing. This was after my diagnosis and that scare. And it just came down to live an awesome life. And it sounds selfish and it sounds focused in, but what it came up for me was to live an awesome life, meaning to be able to live life on my own terms, to be able to spend time with the people I love, to be able to be in amazing physical shape, to be able to go out and rock climb and surf and ski, go on heli skiing trips, do all these things with Kathy, and just have financial abundance without, going through the stress of, not having enough money. That is such a grind. It just grinds on your heart, trying to live paycheck to paycheck. So for me, it comes down to living an awesome life for me, which also means empowering other people to do the same. So that's our purpose at Real Wealth, is helping people create real wealth. So it's like purpose of our company ties into my own personal purpose and my why.
Love it. Anything that Rich left out there, Kathy, that you wanted to add?
Yeah, I think it comes down to what we talked about earlier. And the reason we wrote Scaling Smart is that I do feel retired. Our goal, the reason we wrote the book is so that you can feel that way too, so that you can retire from the things you don't want to do. And then you'll never want to retire from the things you do want to do.
Yeah.
Like on Saturday mornings, I'm reading about the economy. I don't know why I care about it. I just do. I'm obsessed with it. And then because of that obsession, people ask me to be on their podcast to help them understand the economy. And I enjoy that too. I think Rich and I are at a phase in life, at the wisdom phase. We just had both of us, our 60th birthday this year. And I'm going to just call that the wisdom years, that we get to share a lot of the knowledge of, how we were able to set aside time for our marriage, for our children, for our health, and be able to have such a well-rounded life in the midst of growing a business. And the secrets really are in the book of Scaling Smart, of how you're replacing yourself with people who are better than you at things. So that's it. Just being able to watch our leaders run the company, and we're just there, kind of like parents watching our kids launch, be able to take their first steps, watching them make decisions, watching them be so passionate about this thing that we birthed, this company that we built, and now they're taking it to the next level. It's awesome. It's wonderful to watch that.
Well,
Mm-hmm.
I appreciate both of your time. This has been awesome. I'm glad you both came on together. I think you have such a unique story, and obviously people love you and you have a lot to share. If people want to learn more about you, what is the best way for people to network, get in touch, or learn about real wealth? Or you can buy your book anywhere. I'm looking at it right here. You can buy it on Amazon, but what's the best way for people to get in touch with you?
Yeah, well, you asked about the book earlier and we never answered the question. It's for real estate investors, and it's also for anyone with a small business. So anyone wanting to grow that. So just wanted to answer that question. That's why we wrote it. It's key. The book Scaling Smart's all over. And then the best way to get in touch with us is through our website. Just really simple, realwealth.com.
Beautiful. Thank you both. This has been awesome. Rich, great to see you again. Kathy, great to meet you. Thanks for taking the time tonight and coming on our podcast. We're honored to have you on.
Thank you so much for having us.
Yeah, thank you. Enjoyed it. It's fun.
Thanks for tuning in this week to the Wealth Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram and YouTube at Wealth Juice Official, where we post daily tips, tricks, and document our own journey towards financial freedom.